Arvind Sanger is now joining us, managing partner of Geosphere Capital. Arvind, great to have you with us here on the program. It's been a while, Prashant this side. So I want to ask you two things. One is this debt drama in the US perhaps finally comes to a close this week. How will markets respond? One. And two, I was pointing out that the rally in the US market this year so far has been impressive. NASDAQ is up 30%, S&P is up 10%. It's done much better than most other markets around the world. But it's just six stocks which are responsible for 100% of the S&P's gains and about 70% of NASDAQ's gains. It's perhaps been the narrowest rally ever. What are the implications of that? Go on.
So first things first, I think the market has already discounted the debt deal. That was discounted, I think, when it became clear that the two sides had reached the deal, close to reaching a deal a week ago. So I don't think that is going to have much of an effect on the market. On the second point, I think it's a very interesting point. I think this is a very weak rally because a narrow rally like this is not a sign of a healthy market. And these things do not end well. Obviously, the next big event, in my opinion, is going to be the June FOMC. It's, the probability is swinging wildly. Just today, I think it went from 70% or so that they were going to raise 25 basis points to 30% because of a couple of Fed governors making more dovish comments. I've been on the camp that I think they take a pause right now, even if some of the jobs data and others suggest that things are still strong, because they have to give it a little bit of time to see how things play out. So my guess is that they've gone so far so quickly that they can afford to take a pause without, it's not like the economy is going to go rip-roaring away if they take a pause. So I think that probably might cause a little bit more of a rally, but I think this rally on its own is kind of run a lot ahead. And unless the broad-based market joins it, I think, there's a recession risk. I mean, we got some data over this long weekend we just had, which showed that oil demand, petroleum consumption was down something like 2.5%, 3%. That's a very significant, and this is despite prices being much lower this, Memorial Day weekend. So those are signs of an economy that is probably already in recession. And therefore, I think that this narrow rally may not last if that turns out to be the case.
Arvind, hi, good morning. The situation in India is very different, right? I mean, the macro environment has improved substantially. In FY23, the GDP has come in at 7.2%. The GST collections have been at record highs. The manufacturing PMI has come in at a 4-month high. And of course, our own markets are virtually at all-time highs. Do you think the Indian markets have priced in a lot of this positive macro situation, or is there more to go on the upside?
I believe a lot of the good news, short-term is in. But I think if you're a medium to long-term investor, India is clearly in a sweet spot. In fact, we're hosting an event in New York next week saying that is this India's decade? And I think there's a lot of that talk around. But it's clear that, India is in a sweet spot. I think if one takes a 12, 24-month view, there's a lot that can go right. And therefore, we definitely believe that India is in a sweet spot. Short-term trading flows, we have to be careful about. I think the pessimism on China is max about as much as I've ever seen. I think there could be a rebound there. So there can be some short-term swings. But on a structural basis, there's a lot that is going right with India. Part of it is obviously China's own doing, China plus one, but part of it is India's own position, its demographics, its infrastructure, its, all of the things that I think suggest that India is in a sweet spot, and India's inflation is, extremely well contained. And therefore, that gives room for RBI to stay restrained. And those are all positive factors for India's growth story.
Indeed. Hi, Arvind. Good morning. Arvind, you mentioned that the Fed could pause. And yes, the probability out there from mid-teens, it went up to 70%, now back to around the 30%. So let's see what the Fed does. But are you baking in a rate cut towards the end of this year? Or do you believe that will come only in 2024?
Well, I think we could get a rate cut later in this year, but that's because I'm expecting a recession. Without a recession, rate cut doesn't happen, right? So the question is, why would the Fed cut rates? The Fed is not going to cut rates just because inflation comes down. I think inflation coming down is certainly, could amount to rate cut over time. But my expectation is that given the strong employment has to come off. All of that means a recession has to come, and then the Fed cuts rate, because everything kind of follows when a recession happens, inflation comes down, and unemployment, which is the other major, right? There are two objectives that the Fed has. One is rates, and the other is one is inflation, and the other is employment. And so if we get inflation coming down, then I think that rate cut is likely. So I would not be surprised if towards the end of this year we get a rate cut, and that would be based on just that expectation that we're probably already entering into a recession.
Okay, got it. Arvind, so do you have a view on what markets do from here? I mean, at the index level and at a broader level here in India?
Well, I think the earnings season has been pretty decent. I think the outlook for fiscal 24 is strong. I'm not going to make any comments about the market in the next 30 days. Like, if China comes into vogue, if some of the commodities start moving, maybe India is not the one that people first gravitate to in that environment. So anything can happen if my short-term call on a China bounce, even if it's a dead cat bounce from an oversold condition, that I won't call. But I would, if I take up, slightly more long-term 6-month view, fiscal first quarter, second quarter earnings, I think we should continue to see strong trends. And I think in that sense, the Indian market is fine. Short term, I'm not so sure.
Okay, all right. You're not so sure short term. That's fine. But the Indian markets have had a really smooth run up until now. Hopefully, that's something that can continue. Arvind, thanks for stopping by and speaking to CNBC-TV18. Appreciate your thoughts. Let's slip into a quick break. On the other side of the break, our list of top 10 stocks is lined up with our entire research team. Don't go anywhere.